Before central banks existed, before stock markets opened their doors, before governments even understood what finance meant. The world's money was already moving. Across oceans, through war zones, between empires that wanted each other dead. But it wasn't moving through institutions. It was moving through shadows, secret merchant networks, religious orders with coded ledgers, family dynasties that operated like intelligence agencies, underground webs of trust that predated nations themselves. These networks didn't just facilitate trade. They invented the financial system we use today. And here's what your textbook won't tell you. They never actually disappeared. By the end of this video, you'll see exactly where they are hiding in plain sight and why the 2008 crisis proved they still run the show. Welcome to the Wealth Timeline, where we trace how money, power, and history secretly connect and reveal the forces still shaping your world. The false narrative. If you opened a modern economics textbook, you'd be told a convenient story. That global finance was carefully designed by governments, systematically regulated by central banks, and refined by economists with elegant theories and mathematical models. That's the fairy tale. The real history is far older, stranger, and infinitely more human. Before institutions, before regulation, before the very concept of a financial system existed, the world's money moved through invisible channels. Private alliances operating in the margins of official power. Merchant diasporas scattered across continents. Religious orders with international reach. Trading guilds that answered to no king. Family dynasties whose loyalty transcended borders. Underground networks of trust that functioned across territories long before nations possessed the capability to even monitor them. The first true global financial system didn't run on legislation. It ran on relationships, on loyalty, on reputation, and very often, it ran in the shadows. But here's the question no one asks. If these networks built the foundations of modern finance, what makes you think they ever gave up control? The financial wilderness. To understand why these clandestine networks emerged in the first place, you need to imagine a world that seems almost prehistoric compared to ours. A world with no central banks guaranteeing liquidity, no stock exchanges providing price discovery, no deposit insurance protecting your savings, no unified currencies you could trust from one kingdom to the next. Where the value of your gold coins fluctuated wildly because desperate monarchs routinely debased their currency, literally shaving metal from the edges to fund their wars. Where long-distance trade meant gambling against pirates prowling the shipping lanes, warlords demanding tribute at every border crossing, devastating storms that could sink entire fortunes, plagues that wiped out trading partners without warning, and corrupt officials who seized cargo on fabricated pretexts, where sending money across a border required a level of trust no government on earth could guarantee, because most governments couldn't even guarantee their own solvency from one year to the next. This wasn't merely a risky business environment. This was financial anarchy. And in that anarchy, something unexpected became the bedrock of global commerce: identity. If you belong to a group with shared language, shared rituals, shared codes, and, most critically, shared obligations enforced by social pressure rather than law, your wealth could travel safely across thousands of miles. If you didn't belong to such a network, you were completely alone. That's why the earliest global financial systems weren't constructed by countries. They were built by communities. The merchant diaspora. One of the earliest and most remarkable of these communities was the Jewish merchant diaspora. From the early medieval period onward, Jewish traders, later expanding into sophisticated Sephardic and Ashkenazi networks, became some of the only people capable of conducting business between the Christian and Islamic worlds. They possessed critical advantages: multilingualism, geographic mobility, and tight kinship connections spanning Europe, North Africa, and the Middle East. When everyone else saw impenetrable borders, they saw arbitrage opportunities. When hostile kingdoms refused to communicate, Jewish merchants transmitted letters in Hebrew, Arabic, Spanish, and Latin through cousins and business partners who maintained an unbroken chain of trust across civilizational fault lines. These networks formed the first truly reliable international credit system, not because any government backed their promises, but because communal loyalty proved stronger than local law. Betray your trading partner in Cairo, and your cousin in Cordoba would never extend you credit again. The social enforcement mechanism was devastating and absolute, but the Jews were far from alone. The Mediterranean Masters. Across the Mediterranean basin, the Venetians and Genoese were constructing their own parallel financial empires. Their merchant houses didn't just trade, they innovated. They invented maritime insurance to hedge against shipwreck risk. They pioneered joint ventures that distributed capital exposure across multiple investors. They developed sophisticated credit partnerships that allowed them to finance ventures far beyond their individual wealth. More importantly, they created intelligence networks based on shipping manifests, diplomatic dispatches, and commercial correspondence, giving them access to market-moving information weeks before their competitors even heard the news. Venice wasn't simply a city-state. It was a financial operating system running on merchant trust, with standardized contracts enforced not by courts, but by the threat of permanent exclusion from the network. Genoa, meanwhile, funded Spain's imperial expansion through a web of banker financiers who traded sovereign risk like modern hedge funds trade derivatives. Their ships, agents, and encrypted correspondence spanned the Mediterranean in a synchronized, data-driven machine, centuries before the word globalization would even be coined. The corporate prototype. Further north, trade was dominated by a radically different kind of network, one that looked less like a family and more like a multinational corporation, the Hanseatic League. This federation of merchant cities, Lübeck, Hamburg, Danzig, Riga, Bergen, and dozens more, functioned as a single commercial empire stretching from England to Russia. They didn't just trade, they controlled. They enforced trade monopolies using their own private naval fleets. They standardized weights, measures, contracts, and credit terms across vast territories. They operated contour, fortified trading posts with extraterritorial legal privileges that functioned like corporate embassies. The Hanseatic League was effectively a multinational conglomerate operating 4 centuries before corporations became recognized legal entities. They proved an essential truth. Coordinated networks could outperform entire kingdoms when it came to economic efficiency and military projection. But while Europeans focused on the Atlantic and Baltic, another network was quietly mastering an even more ambitious geographic expanse: the Silk Road Financiers. In the east, the Armenian merchants of New Yulfa were building trade routes that stretched from Amsterdam to Bengal, from Isfahan to Manila. Displaced by wars and persecutions, these merchants transformed diaspora into competitive advantage. They could move silk, silver, spices, and, most importantly, credit across hostile religious and political borders, using nothing but family ties, a multilingual correspondence, and internal arbitration systems that never involved outside authorities. Their reliability made them indispensable to the Safavid Empire in Persia and to European trading companies, who often trusted Armenian intermediaries more than their own governments. The Armenians understood something profound. In a world where contracts were unenforceable across borders, reputation became the only truly portable form of collateral. Everywhere you look, the pattern repeats. Where states failed to provide trust, networks created it. Where governments couldn't guarantee contracts, communities enforced them. Where laws ended at borders, relationships transcended them. The warrior bankers. But perhaps the most dramatic example of secretive financial power emerged from an entirely unexpected source: an order of warrior monks, the Knights Templar. Founded in 1119 to protect Christian pilgrims traveling to Jerusalem, they soon discovered something far more powerful than military might: the transformative potential of financial infrastructure. The Templars constructed fortified compounds across Europe and the Levant, secure facilities that functioned like the world's first international bank branches. They accepted deposits from nobles and merchants. They issued encrypted letters of credit that could be redeemed at any Templar facility across thousands of miles. They effectively invented the international wire transfer 7 centuries before SWIFT. A French merchant could deposit gold in Paris, receive a coded document, travel to Jerusalem, and withdraw equivalent funds, without ever physically transporting the dangerous cargo. The system worked because Templar secrecy and discipline made them more trustworthy than any king. But that same secrecy made them politically vulnerable. As their wealth and influence grew, so did their enemies. In 1307, King Philip IV of France, drowning in debts to the order, orchestrated a coordinated Friday the 13th arrest of thousands of Templars across his kingdom. He seized their assets, extracted confessions under torture, and attempted to erase their organization from history. He succeeded in destroying the order, but he failed to destroy their innovation. The Templar system of deposits, letters of credit, and international settlements survived, absorbed and refined by the next generation of financial networks, the family dynasties. By the late Middle Ages, Europe's financial elite had shifted from religious orders to something more enduring: family dynasties. The great Italian banking houses, the Bardi, the Peruzzi, and most famously the Medici, became the backbone of European commerce and statecraft. They established branch networks in every major capital. They communicated through coded correspondence that moved money faster than royal messengers could carry orders. They invented double-entry bookkeeping, which transformed accounting from an art into a science. They financed kings, popes, wars, and empires. The Medici didn't just accumulate wealth, they accumulated leverage. When you controlled the credit that allowed monarchs to field armies, you effectively controlled foreign policy. Then came the Fuggers. This German merchant banking dynasty made the Medici look modest by comparison. The Fuggers alone financed the election of Holy Roman Emperor Charles V in 1519, demonstrating conclusively that private finance could determine public power at the highest levels. And Jacob Fugger, when Emperor Maximilian attempted to renege on debts, reportedly reminded him, "It is well known that your imperial majesty could not have acquired the Roman crown without my help." These families didn't deploy armies. Their influence derived from two sources: information speed and credit leverage, the exact same forces that shape markets today. But financial power isn't only about money. It's about knowledge. The information brokers. And one network controlled more global knowledge than any government of its era: the Jesuit order. Founded by Ignatius of Loyola in 1540, the Society of Jesus built an unprecedented intelligence apparatus disguised as a religious mission. They established schools, missions, and scientific outposts across Asia, Europe, and the Americas. They mapped coastlines with navigational precision. They documented trade routes and local economic systems. They studied languages, cultures, and commercial practices. They advised kings and merchants with information gathered from 5 continents. The Jesuits weren't bankers in the traditional sense, but they controlled something more valuable: the information flows that merchants and monarchs depended upon for strategic decisions. In the early modern world, information was currency, and the Jesuits operated the world's most sophisticated information exchange. They knew which ports were blockaded before admirals. They knew which harvests had failed before ministers. They knew which princes were vulnerable before rivals. And they used that knowledge to shape both spiritual and economic outcomes across the globe. The Lodge Network. As Europe transitioned into the Enlightenment, yet another network emerged. This one concealed behind elaborate symbols, arcane rituals, and strict codes of secrecy. The Freemasons. Masonic lodges became meeting grounds for an extraordinary cross-section of society's elite. Merchants, bankers, scientists, politicians, military officers, and revolutionaries. At a time when communication was agonizingly slow and governments were notoriously corrupt, a Masonic handshake and password could establish trust more effectively than any legal contract. Why? Because expulsion from the lodge meant social and commercial death. Many early industrialists, central bankers, and revolutionary leaders belonged to these circles, not because of supernatural influence, but because lodges offered something invaluable: a stable, rule-bound environment where elites could collaborate across national borders and political divisions. The lodges weren't conspiring to control the world. They were creating the trust infrastructure that made Enlightenment capitalism possible. The ultimate network. If all of this sounds like prologue to modern finance, it is. But the final, decisive transformation came with one family whose network became more powerful than most sovereign states. The Rothschilds. The Rothschilds didn't invent international finance. They perfected it into a science. While earlier networks relied on slow caravans, fragile correspondence, and seasonal trade routes, the Rothschilds constructed the fastest private communication system in Europe. Faster than royal couriers. Faster than military dispatch riders. In critical cases, faster than government intelligence agencies themselves. When market-moving news broke, the Rothschilds learned about it first. And in finance, information asymmetry isn't just power, it's profit incarnate. Mayor Amschel Rothschild executed a masterstroke of strategic positioning. He stationed each of his 5 sons in a different European capital: London, Paris, Frankfurt, Vienna, and Naples. This created a synchronized 5-node banking machine connected by coded letters, bonded couriers, and absolute familial trust. They were the culmination of everything earlier networks had discovered: diversify risk geographically, move information faster than rivals, keep intelligence private, reinforce trust through blood loyalty. They weren't mystical puppet masters. They were simply executing the networked game better than anyone else alive, and they were playing with better information than anyone else could access. They financed governments that were actively at war with each other. They transferred capital across borders that were technically closed. They stabilized currencies, funded railways, and built the arterial infrastructure of the modern industrial economy. And because their network operated faster than newspapers, diplomats, and even military intelligence, they often moved markets before anyone else even understood what had happened. The Rothschilds were not the beginning of shadow finance. They were the last great expression of an era when private networks ruled global capital more completely than any government could. The state strikes back. Because as the 19th century unfolded, the state finally began catching up. Public institutions emerged with increasing sophistication. Central banks that could provide liquidity, stock exchanges that offered price transparency, clearinghouses that reduced counterparty risk, national bond markets that allowed governments to borrow directly from citizens. These institutions represented governments' attempt to tame, or at least monitor, the power of private financial networks. But even as these official structures grew in size and authority, the underlying networks didn't disappear. They didn't collapse, they didn't surrender. They simply merged with the new institutional architecture of the modern world. They became the informal layer beneath the formal system, the place where real decisions happened before official announcements were made. And that brings us to the present. The illusion of order. Today's financial world looks, on the surface, orderly and transparent. We operate under the comforting illusion that modern finance runs on laws, regulatory frameworks, published balance sheets, and monetary policy decisions announced by central banks. We imagine that governments control capital flows, that regulators contain systemic risk, that market forces operate within visible boundaries. We believe the system is knowable. But behind that polished institutional facade, the old machinery is still humming. Modern shadow banking, the trillions of dollars moving through hedge funds, special purpose vehicles, and offshore structures outside formal regulation, looks eerily similar to the off-books financial activity of the Venetian and Genoese merchant houses. In Eurodollar markets, where US dollars circulate entirely outside US jurisdiction and regulatory oversight, function almost identically to the cross-border credit webs pioneered by the Sephardic diaspora. Offshore banking centers, from the Cayman Islands to Singapore, rely on trust, discretion, and private relationships in ways the Knights Templar would immediately recognize and admire. The modern networks. Private equity networks and venture capital circles are the new Masonic lodges. Exclusive clusters of influence where transformative deals happen quietly, where access matters infinitely more than law, and where exclusion means commercial irrelevance. Global intelligence networks and multinational institutions like the World Economic Forum, the International Monetary Fund, and the Bank for International Settlements behave remarkably like modern Jesuit orders. Collecting information across continents, coordinating policy behind closed doors, and shaping diplomatic and economic outcomes through informal influence rather than formal authority. And the most powerful financial players of our era, central banks, sovereign wealth funds, multinational corporations, rarely act independently. They operate through conferences, strategic alliances, private messaging channels, coordination groups, and elite forums that replicate the same trust-based structures medieval merchants depended upon. The technology has evolved, the architecture has modernized, but the fundamental function remains unchanged. Networks still move faster than institutions. Trust still flows through private channels before it reaches public systems. The structural truth. These networks aren't sinister, they're structural. They exist because financial systems cannot function without three essential elements: trust, information, and coordination. And governments, even today, even with all their technological capabilities, struggle to provide those elements at the speed and scale modern markets demand. When markets panic, when currencies collapse, when sovereign states default on their obligations, it's not the law that restores order first, it's the networks. The emergency credit lines extended between institutions that trust each other, the behind-the-scenes negotiations conducted by people who've worked together for decades, the quiet phone calls between counterparties who depend on each other's survival. That's the lesson history keeps teaching, and that we keep refusing to learn. Every major public financial institution sits on the foundation of a private network. And that network, invisible, informal, operating below the surface, is where the real power still resides. The legacy. The Knights Templar didn't just invent letters of credit. They proved that trust could be institutionalized across borders. The Jewish and Armenian diasporas didn't just connect continents. They demonstrated that identity could serve as portable collateral. The Italian banking dynasties didn't just invent sophisticated accounting, they showed that information speed could overcome military power. The Jesuits didn't just collect knowledge, they proved that information networks could shape empires. The Freemasons didn't just hold secret meetings, they created trust infrastructure for Enlightenment capitalism. The Hanseatic League didn't just regulate ports, they demonstrated that coordinated networks could outperform sovereign states. The Rothschilds didn't just fund empires, they perfected network coordination into an art form that modern financial institutions still study. Together, they built something that has never been dismantled, the nervous system of today's global economy. A web of trust, leverage, communication, and influence that still moves faster than laws, faster than governments, and often faster than markets themselves can consciously register. The question returns to us with uncomfortable urgency. What are we actually living in today? A system of transparent institutions operating under democratic oversight? Or a system of opaque networks merely wearing institutional clothing? Because the deeper truth, the one that makes people uncomfortable, is this. The more complex the global economy becomes, the more valuable trust becomes. And trust still flows primarily through private networks, long before it ever reaches public systems. That's why, in every financial crisis, those with access to the right networks survive relatively unscathed, while those outside those circles pay the price. In foreclosed homes, lost jobs, evaporated savings, and decades of austerity. It's not fair, it's not transparent, it's not democratic, but it is reality. Global finance was born in the shadows, in the encrypted letters of medieval merchants, in the fortified compounds of warrior monks, in the family networks of diaspora traders who had no homeland to protect them. And even now, centuries later, after all our regulatory frameworks and institutional reforms and transparency requirements, the shadows still shape it. The networks still run beneath the surface. The old machinery still hums just beneath the polished floor of the official system. Understanding this doesn't make you a conspiracy theorist. It makes you a student of history. Someone who recognizes that human institutions rarely function the way they claim to on paper. The textbooks will tell you finance is about markets, regulations, and central bank policy. The wealth timeline will show you what actually runs the system: relationships, information, trust, and power, flowing through networks that have existed for centuries and have simply learned to adapt. If this gave you a new lens on how power actually works, subscribe to the Wealth Timeline, because history doesn't just explain the past, it reveals the patterns still running your present. And the next network we uncover might be the one controlling something you thought was transparent.